Welcome back to Inflation Decoded and Explained, my little inflation crash course for everybody who is interested in my view on the topic. And for anybody who is really interested in the topic, can only recommend my book, The Return of High Inflation. You can get it on Amazon and anywhere else. 360 pages, but let's shorten it a little bit into this 5-minute video. Inflation, stock market, and Warren Buffett. That's the topic today. And I give you 3 numbers that show you a very important topic about inflation and investments. Absolute versus relative performance. Let's go back to the 70s. As I mentioned before in some of the videos, during the 1970s we had a very severe inflation crisis. More specifically, during 1973 and 1982, we had very, very high inflation and severe recessions during this period. And it lasted almost 10 years until we got inflation under control again. Now let's look how investments did back then. The accumulated inflation for that period, 1973 to 1982, was roughly 130%. So that's our benchmark. If we beat that benchmark, we made money. If not, in real terms or in purchasing power terms, we lost money. Now let's look at the S&P 500. Over the 10-year period, if we include the dividends every year, we made about 90%. Keep in mind that's pre-tax. 90% over a 10-year period. At the first look, that looks okay. It was a risky, volatile period, but in relative terms to inflation, we lost money. So our investments could buy us less in 1982 than it could buy us in 1973. That's a very devastating message. We didn't make money over a 10-year period. The message gets even worse. Keep in mind, these were nominal gains, which you have to pay taxes on, even though in real terms you lost money. So the gap gets even bigger. And obviously, if you exclude the dividends, the gap gets much more bigger. So the stock market in general did not beat inflation during that time period. That's a very bad negative message. Now I didn't want to leave you on such a negative note. There is hope. If you look at Warren Buffett and his company Berkshire Hathaway, this example shows if you have a superb understanding of inflation, if you understand inflation economics, you can beat inflation, and you can beat it in a very big way. You know, Warren Buffett likes to use book value per share to measure his success, but if you take the share price, the message is very similar. During that time period of the 1970s inflation period, Berkshire Hathaway increased its book value per share by over 900%. How was that possible? Well, it was possible because Warren Buffett was a master in managing inflation risks and turning them into an opportunity. He understood that cash is not trash at that segment of the inflation period before an inflation shock. So what happened back then in 1973, 1974, for example? Well, the S&P 500 actually, in the beginning of the inflation period, lost almost 50% over a 1.5-year time period. Well, if you had cash during that period, you could buy excellent stocks at a discount. And that's what Warren Buffett did. If you were fully invested, obviously that was much less of an option for you to do. He also understood that each asset class has its time to shine. Before an inflation shock, Inflation shock is the time period when the vast majority of the people understand inflation is not just a temporary occurrence, it's here to stay and it's gonna be an issue going forward. So before an inflation shock, for example, if you have cash and then stock market goes down, that's good. After an inflation shock, then stocks are cheap, stocks shine. Later, when you get to a plateau of an inflation period, it's the time for long-term government bonds or long-term bonds in general. So that's very important. You need a dynamic inflation management approach during these turbulent times. And Warren Buffett was the one who understood inflation and could translate it into a dynamic approach to deliver such a performance. Now, not everybody can beat such a performance, but that's not the point. It's not about beating such a performance. It's about beating the inflation, trying to lose as little purchasing power as possible, or even better, trying to beat the inflation rate. And with that, you need to understand how an inflation period works. And we're gonna talk about that in the next few videos. And I will introduce my 4 phases inflation management model, which I developed a little while ago, and which is also in my book, The Return of High Inflation. I hope this was helpful to you. I'm honored if you subscribe to my channel and become a regular visitor. We're gonna have a lot more videos. If you have any questions, please share them with us in the comment section. Thank you very much and good luck.